My name is Nur Alia Hannani Binti Othman, number matric 28C890. For the background, Bonia Corporation Berhad is a Malaysia-based investment holding and management company. Bonia Corporation is categorized as a consumer cyclical specialty retailer. It was established in 1974 by the group of executive chairman Mr. Chiang Sang-sam as a business involved in designing and manufacturing leather goods for wholesale in Singapore. The first boutique was opened in Singapore in 1981 and for Malaysia in 1988. The company is engaged in the product design, manufacturing, marketing, distribution, and retail of luxury leather goods, footwear, apparel, accessories, and lifestyle products under its brands and licensed brands.
Assalamualaikum warahmatullahi wabarakatuh. My name is Zawis Syarah, Binti Ahmad Daud, matric number 288534. I will talk about the profitability ratio. Bonia Corporation Berhad's profitability ratio has improved during the past 3 years, and Bonia Corporation Berhad exhibit positive trend in the profitability ratio from 2021 to 2023. The profit margin increased steadily, reaching its peak at the 2023 at 18 cents, indicating the improved cost control and higher profitability of sale. Return on asset shows a consistent uptrend, with 2023 recording the highest value at 12 cents for every 1 ringgit of assets, it reflecting improved efficiency in asset utilization. For return on equity, we can also saw the improvement over the 3 years, with 2023 delivering the best results. It demonstrates how well Bonia Corporation Berhad make money, and it shows that Bonia Corporation Berhad's profitability and efficiency in generating profit are excellent. For the solution or suggestion, Bonia Corporation Berhad needs to focus on cost optimization and explore avenues for revenue growth to sustain or further enhance profit margins. Bonia also need to maintain efficient asset management practices and consider periodic assessments to align with the market trends. Provide specific return on equity figures for the comprehensive analysis of equity utilization, and consider strategies to enhance shareholder value. Communicate financial success transparently to stakeholders and ensure understanding of financial metrics and implication to maintain investor interested to invest to Bonia Company. Bonia Corporation Berhad also has to monitor the overall financial position to identify potential risks associated with increased profitability and develop risk mitigation strategies. Bonia also can establish a system for continuous financial monitoring, adapt strategies to exchange market conditions, and regularly update financial goals. In conclusion, the emphasis is on proactive management, continual reassessment, and strategic adaptation to ensure sustained financial health and effective communication with the stakeholders.
The graph next to me shows the short-term ratio for the following 3 years. Over a period of 3 years, the company's current ratio went from 2.76 to 2.89 within 2022 and 2021, respectively, then dropping slightly to 2.80 in 2023. This constant ratio of greater than 2 means that the company has enough current asset to meet its short-term liabilities. Next is a quick ratio. Quick ratio greater than 1 is typically seen as good. In this case, the company's quick ratio increased from 2.04 in 2021 to 2.16 in 2022 before dropping to 1.90 in 2023. Despite the decline in 2023, the ratio still shows an outstanding capability to meet short-term demands without depending heavily on inventory. A large cash ratio reflects a greater capacity to pay off short-term loans. In particular, the cash ratio of the company has increased significantly from 0.18 in 2021 and 0.21 in 2022 to a considerable rise to 1.0607 in 2023. This sudden increase in the cash ratio for 2023 demonstrates an important increase in the company's current liability.
So, for the next ratio, which is long-term ratio, the first ratio that we calculate is total debt ratio. Based on the table above, it shows that 2022 recorded a higher total debt ratio, but in 2023, the total debt ratio experienced a slight decrease, indicating that the company managed to control financial stability. Next, debt equity ratio shows that there was a slight increase from 2021 to 2022, then experienced a slight decrease in 2023. For equity multiplier, in 2022, it recorded a higher value, which is 1.5255, that indicate a higher level of financial leverage, suggesting that the company rely more on debt to fund its asset. On the other hand, the table above note down the highest value of time interest earned ratio, TIE ratio, in 2023, which is 4.2527. This means that the TIE ratio for Bonia Corporation is 4, or 4 times the annual interest expense. And for the last one, cash coverage ratio experienced a sharp increase from 2022 to 2023. This means that they indicate a greater capacity to cover interest payment with available cash.
Next is asset utilization or turnover ratios. For the first ratio, inventory turnover ratio that measures how quickly a firm sells its goods. The higher value is in 2022 means the company has an efficient inventory by selling and restocking it quickly. For me, having timely is needed to ensure that new inventory is ordered in a timely manner, preventing stockouts without leading to excessive holding costs. Number 2, days sale in inventory ratio, having up and down ratio in those years. This ratio shows how much the firm takes time to sell its inventory. The graph shows the lowest number of days is in 2022, indicates that the firm takes a shorter time to sell its inventory. Next, receivable turnover ratio increased from 2021 to 2022 means there is improvement in receivable management but decreased back to 27.16 in 2023. Then the corresponding days sales in receivable ratio decreased from 2021 to 2022, indicating a quicker collection of receivables. But the changes in 2023 shows a subtle slowdown in receivables turnover efficiency compared to the previous year. These changes may be because of change in customer payment behavior, credit policy changes, expansion into new markets or customer segments, economic conditions, and so on. Lastly, the total asset turnover has a positive trend in utilizing assets to generate revenue. The higher the ratio, the higher the company generates revenue. That's all. Thank you.
My name is Ummi Manarina, Binti Mohd Basir. My metric number is 285206. From a discussion, the analysis of Bonia Corporation Berhad's financial performance above, these are several ideas or solutions that might improve the company's overall performance. First is optimizing cash management. While a considerable improvement in the cash ratio in 2023 is a beneficial sign, lower ratio in 2021 and 2022 could point to possibly cash management issues during those years. This may include aggressive investment initiative, unexpected expenses, or a lack of priority for working capital management. To overcome this challenge, effective and cash flow and managing procedure must be used. For example, accurate cash flow forecasting, working capital optimization, investment and financing strategy, technology integration, monitoring and review are all part of the process. Second is inventory and receivable management. Inventory and accounts receivable turnover ratio are important clue of how well a firm manages its inventory and collect payment from consumer. While favorable turnover ratio usually indicate healthy operation, a slight drop in this ratio in 2023 highlight possible area for development in more efficiently managing inventories and receivable. Here are some techniques for improving inventory and receivable management. The first step is use just-in-time inventory management or inventory optimization approach to assist streamline inventory levels. The other step is in improving supply chain operation that may have a substantial influence on inventory turnover. And the last solution is strengthening corporate governance and transparency. Strong corporate governance and transparent financial reporting serve as key base that boost investor trust, attract stakeholders, and greatly contribute to a company's long-term success. These practices are critical for developing responsibility and ensuring ethical behavior inside a company. The following are significant factors and techniques that lead to improved corporate governance and transparency. First is to maintaining ethical standards. Second, it is vital to ensure compliance with law, regulation, and industry standards. Another stage is to form an independent board of directors with various kinds of professional expertise.
In conclusion, financial performance is a vital indicator of a company's health and potential for growth. Bonia Corporation Berhad financial performance has been positive and improving across various ratios, indicating strong short-term and long-term liquidity, efficient use of resources, and effective management of debt. Based on the available information, the following suggestions can be considered to improve the company's performance, such as optimizing cash management, utilizing inventories, receivable management, and strengthening corporate governance and transparency. By addressing the suggestion mentioned, the company can further enhance its performance and sustainability. That's all from our group. Thank you.